All right, let's start off. You're going to actually give us the word of the day today. What is it and why?
Fire. Because I think this is a tech market that's going to be on fire, not just for going into the end of the year this week, but what I believe right now, this AI revolution, it's hitting its next phase. And I think this is just still the start of a fourth industrial revolution.
All right, still the start, but you always say it's 9 o'clock. It's got to be 9:30.
No, I actually said it now. It's 9:30 to 10 p.m. in the AI party. That goes to 4 a.m.
All right, so you have a number of upgrades in the space, specifically in the software space when it comes to AI. One of them is Snowflake. The other one's actually Elastic. We've been fortunate enough to have the CEO on the show. Kind of a broad-based play. They do cloud, they do security as well. Why these two names?
Look, I think, and we've talked about a lot here on the show, now the second derivative, the software piece of AI is here. I think in 2025, that's going to be the key. You look at Elastic, Snowflake, names like MongoDB, they're the ones now that follow names like Palantir in terms of the software, the use cases. I believe the software AI age is now here. 2025, that's going to be front and center. That's why we upgrade those names.
All right, so both of those names have recently had earnings, actually. We're going to show the charts. Big jump. Snowflake's up over 25% since earnings. Elastic's up over 20% since earnings. What's going to push them even higher? I mean, they've had big spikes post-earnings. What else is going to happen that's going to be another catalyst?
That's just the appetizer in terms of where I believe these stocks are going. Because now the consumption model, what's happening across enterprise AI, obviously it starts with Godfather of AI, Jensen, Nvidia. But now you look at the consumption piece, these LLM models, what you're going to start to see, I believe earnings and overall growth is being underestimated potentially by 15, 20% over the next few years. That's why you look at names like Snowflake, Elastic, Mongo. It all starts, obviously, with Messi of AI, Palantir, but this software phase is here, and it's just the beginning.
All right. So how does the idea of bond yields play a part of this? I want to ask you, probably back in 2022, we were talking a lot about bond yields. We're talking about the stronger dollar. In fact, right now, the dollar's even higher than it was back in June of 2022 when Microsoft warned, when Salesforce warned. How did those things play a factor in this tech trade?
Well, look, on currency, clearly, that's been, that could be a headwind. I think the difference now is that a lot of that's factored into guidance. Now, we got to see if that continues in terms of dollar strength. But we're in a much different situation today relative to, I think, what we're seeing from a demand perspective. That tightening environment that really actually was a big hurdle in terms of software, we're seeing the opposite of it because of where this AI revolution plays. So I think even though you could have some currency headwinds, it is not getting in the way of what I believe is we're going to be talking about NASDAQ 20,000. And I believe in the next 2 years, NASDAQ 25,000 is something that we'll be talking about.
So again, your picks for us today are Snowflake and Elastic. I also want to talk about deregulation, the idea of some changes when it comes to the FTC and other areas that are regulators. Does that help either one of these names, or are they neutral to that?
Well, I think it's actually bullish because in our view with Khan going to be out, FTC, this is going to be significant in terms of deal making. I think these are companies that are going to go on the offensive. And then on the other hand, you're just going to have massive M&A from strategic as well as on the financial M&A side. And that's why software has underperformed. But if you look in 2025, I think a year from now, we sit here and we're like, software is fire. Because this is just the start of what I view. 9:30, 10 p.m. is the AI revolution. We're talking about $2 trillion of AI capex. Now software, they were on the velvet ropes behind Nvidia, Microsoft, the hyperscalers. Software is like, let us into the party. Party's here.
The party's here. Okay. I'm going to get to our mystery chart. It was Palantir. So Palantir having a huge year so far, and you just raised your price target on Palantir. So the street's at about $37. You're at $75. This stock's had a big run-up. What's going to continue to move this higher?
Look, and the haters will continue to hate, as we know, in terms of the bears on Palantir. They are still underestimating when it comes to the software, the use cases. There's no product out there that matches what I believe what Karp and the team have done at AIP. So I think the enterprise piece, we're talking about something that could ultimately be billions of revenue. So when you actually look at what this means, $75, be like, oh, it's expensive. I look out 3-4 years from now, could Palantir be the next Oracle, the next Salesforce, the next SAP? That's what I think we're talking about. And that's why, look, the bears will come out of hibernation, talk about valuation, just to start what I view for the Messi of AI.
Nvidia is now directing its focus toward a spectacular opportunity in the gaming industry that promises to be a game changer. quite literally. Nvidia's unveiling at the CES 2025 trade show hints at a dynamic expansion in the cloud gaming realm that could significantly enhance its market position. With AI having transformed Nvidia's business model, making it a pivotal revenue driver, gamers and tech aficionados alike are eager to see how this new venture pans out. Welcome back to Investocracy.
Should we be surprised at this resurgence, this melt-up? And it's maybe caught some people by surprise.
I think investors should realize 2024 has been a year of surprising strength. The market has avoided so many opportunities for weakness, and now we're entering the final weeks of the year where we know there's still $7 trillion of cash on the sidelines and quite good visibility in next year. So I think stocks should finish very strong.
Why do you think money is going to the mega caps now in the manner that it is? Up 1.75% today, the NASDAQ up almost 4% over a month, and able to achieve this milestone?
One reason is mega caps have been leading. So it's sort of what people reach into the shelf when they're risk on. But second, we know that when interest rates fall, the mega caps actually are very sensitive to that. And I think today was a day where the odds of a December cut increased. You know, the probabilities are now solidified, and that's actually bullish for tech.
Because the CPI was, you know, some would say sticky, but it was largely in line. Is that how you read it?
Yeah, that's right. And I think it's allowing, the CPI print today allows people to imagine a path to 2% because shelter now is cooling to a level that's in line. Auto insurance, which was at 25% earlier this year, year over year, is now down to 13%. So the two biggest contributors to CPI are in a downshift. I don't think the fact that used cars are going up is going to reverse the Fed's view. I don't think the Fed's going to tighten because used car prices are up.
All right, so Fed's cutting next week. That's
Yes.
your base case?
Yes.
And then what happens after that? All bets are off? Wait and see? What do you think?
I think the Fed put remains in play because neutral is, let's say, 2.5% to 3%. We're at 4.5% after the December cut. So we know the Fed's in a cutting cycle. I actually think the best case is for the Fed to do the fewest number of cuts next year.
That means the economy is pretty strong.
That's right. It's strong. They're not harming the economy by keeping rates here. And the labor market is holding up, and now we have a lot of firepower for future cuts, which support stocks.
Okay, you talk about a Fed put. You also talk about another put, and that's a Trump put.
Yes.
He's going to be here tomorrow, by the way, ringing the opening bell. People are excited about that down here for sure. But you say that that is a substantial part of your outlook for the new year. The Trump put, explain.
The Trump put is, on the simplest level, it is a White House that is going to measure its success by how the stock market performs. But it's also a president that's coming into a second term, but with a lot of previous experience. So this is a cabinet that has good private sector acceptance, and I think very markets friendly. Overall, I think investors who might have been cautious for the last few years now want to be risk on next year.
All right. So your outlook to me is interesting, the way you sort of game out where the S&P can go, because you say we're going to 7,000 by mid-year, which sounds amazing because most targets that I've seen are 7,000 at the top end for the entire year. Your full year forecast, though, is 6,600. Why?
Part of it's cyclical. We're coming off two back-to-back 20% years, and there are 5 precedents to look at. 5 of the 5 precedents since 1880 had a weaker second half. So I'd say that's the base case. The reason I think markets do better in the first half is that there is going to be a lot of enthusiasm about a new White House, some of the headlines that come, whether it's deregulation, et cetera. And we know there's still a ton of cash and a lot of low leverage on the sidelines. That's why stocks can rally. And by the way, 11% in a few months, we've seen that routinely the last couple of years. But in the second half, I think markets start to worry about the larger macro risks like the Middle East, the potential risks of tariff and executing that, and potentially the fact that Doge could be so successful that it could slow the economy.
You're worried about being too efficient, cutting too much, and what the impact is going to be?
Yes.
Nvidia has been predominantly recognized for its dominance in AI, notably raking in a staggering 88% of its total revenue from this segment. Once upon a time, gaming was Nvidia's signature forte, but it now accounts for a mere 9% of its revenue. However, Nvidia is not just resting on the laurels of its data center business. Instead, it's turning heads with a strategic expansion of its cloud gaming service, GeForce Now. At the core of this narrative is the GeForce Now platform, set to unlock gaming potential on a multitude of devices, including the Steam Deck and next-gen VR headsets from giants like Apple and Meta. This innovative step is not just about bringing high-end gaming experiences to a wider audience, but also tapping into the burgeoning market of cloud gaming, a move that could suit Nvidia like a well-fitted glove. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Our next guest was at that event, the CES in Las Vegas, and he describes it more like a rock concert than a tech CEO speech. Dan Ives is Wedbush Securities analyst, of course, joins us now. Has a buy on Nvidia, price target's 200. Good morning, Dan. Let's talk robotics and autonomous technology. You say in your talking points or your review of the speech, that alone represents another $1 trillion of incremental market opportunity that Nvidia can now tap into over the coming years. How do you get to that number, and how do you derive the value you are for Nvidia from it?
Yeah, I mean, look, to me, I think Jensen laid out the strategic vision for the coming years. When we look at robotics, autonomous, I mean, I believe ultimately those are going to be some of the biggest use cases of AI. And I think what you saw from NVIDIA last night is they're not just sort of going to be a provider. They're going to play a huge role in this sort of vision. And obviously, Tesla on the autonomous side continues to be front and center. I think this is the next step. I think this is a snapshot of the future. And you look at it incrementally, you go out the next few years, I think Street's underestimating growth by 25, 30%, which is why I think not just 4 trillion, you could be looking at 5 trillion market cap.
Underestimating growth by 30%. What is it? Is it robotics? What's being underestimated, so to speak, in terms of the growth for this company?
I think one, it's Blackwell, just overall from a demand perspective. We think 15-to-1 demand to supply in terms of what we see. I think when you look at robotics and autonomous, given the market opportunity, that could ultimately be 15-20% of what I view as disruptive technology. I mean, that could be an incremental 20-25% just to the top line over the next, call it 2-3 years. I think that to me was the sort of watershed moment last night. It's Jensen laying out NVIDIA. It's not just about Blackwell chips, the new oil gold. It's about where this is all going. And we believe autonomous and robotics, that's a huge part of the fourth industrial revolution.
Right. So what does a ChatGPT moment in robotics look like then, Dan? What does that mean?
I think physical AI. I mean, we've talked about from Robotaxi Day in October. I think we're going to be looking next 2-3 years. Robotics is not just going to be from CES. It's going to be real. And I think it's something that's going to play out in factories. It's going to play out in consumers and households. And I think a year from now, we start to go more advanced prototypes to something that's going to become a reality. And I think that's the key here, is that we are still in the early days of the AI revolution. And there's only really one player. I mean, it's NVIDIA's world. Everyone else is paying rent. That was a flex the muscles moment from The Godfather last night.
What about what I was just talking about, Dan, which is higher yields and the fact that all those stocks are down today? I know you're excited about the fundamentals and the innovation here, but does it make you question valuations when we are seeing a rate move like this on some of those ideas?
Yeah. No, look, and that's the push and pull, and I get it. But my view, Sarah, is that we have $2 trillion of AI capex next 3 years. And even when you look at tech, look at Microsoft just going to 80, from 44, basically doubling their capex. You look at numbers, you could say valuation, but I think it goes back to, I think earnings and ultimately top line growth for tech is being massively underestimated into the next year or two. And that's where the growth is. This revolution is not going to be stopped in a 10, 20 bit move on the 10-year.
According to Alex Partners, spending on cloud gaming is set to soar, with an expected revenue of $11.1 billion in 2025. A witty investor might joke that buying into Nvidia is like claiming the VIP pass at a game release. It's more than worth the upfront investment for what's to come. Such optimism isn't misguided. Nvidia's reported 90% control of the gaming graphics card market serves as a testament to its technical prowess. So, not only does cloud gaming eliminate the need for gamers to splurge on expensive hardware, but it's also presenting a tempting financial proposition for gamers and investors alike. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
And I think we're looking, in our opinion, this is still only the second inning of the 9-inning game. And everything we see from all of our spending is about the multiplier. For every dollar spent on Godfather of AI, Nvidia, on those chips, there's a $8 to $10 multiplier across the rest of tech, which is why I continue to believe that tech stocks are going to be up 25% into next year. And it's only 10 p.m. in this AI party that goes to 4 a.m.
Right, and you've been saying that for some time. I think you may have moved us an hour later. I'm not sure along the way.
It started off at 9 p.m. Now it's 10 p.m.
Okay, it's 10 p.m. Dan, there is this question as to, are investors going to start to demand to see a real return from all the investment that's been made, the hundreds of billions, frankly, that will have been invested and will be invested in the coming year as well by the hyperscalers, for example. Do you think that demand will be made, and will it be met?
Look, that's been the big question. I think we started to see that inflection point with the messy of Palantir, because I think if you look at Palantir, that was the first one in the use case that we start to now see these things play out across enterprise. Then Salesforce, that was a huge moment where we saw from Benioff in terms of that last quarter. I actually think software is going to be the key. I think the use cases are expanding across the board. I mean, we have use cases and enterprises that we're talking to up 5x in terms of deploying AI and what I ultimately use cases even over the last 6 months. And I think that is going to be the key as this all plays out. Look, $2 trillion of CapEx, AI CapEx next 3 years. Fighting that is going to be tough, and that's what I continue to say. The bears can find AI in the spreadsheets. I get it. These companies have to execute. But execution's been there, and now it's going to be about the rest of tech. That's why we laid out. Those are the top 10 plays that we see for AI in 2025.
As forecasts predict monumental growth, potentially soaring to $64 billion by 2030, Nvidia's strategic focus and existing technological edge position it for a significant market share. So, is this the right time to jump on the Nvidia bandwagon? How does this influence your investment decisions? It's a conversation worthy of the excitement this development brings. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.